The Federal Reserve did something today that will affect your money. It raised interest rates for just the fourth time since the end of 2015. The decision by the central bank signals confidence in the economy. A healthy economy is believed to be able to withstand an increase in borrowing costs. But the hike came despite a double whammy of weak economic reports today. Retail sales recorded their biggest drop in 16 months, suggesting consumers remain cautious. And consumer prices fell unexpectedly last month. And it's data on prices and inflation that the Federal Reserve is watching closely. Kate Rogers has more.
The Federal Reserve raising rates for the second time this year because the economy looks stronger. The Fed hiking the target range for the federal funds rate by a quarter point to between 1 and 1.25%. Fed Chair Janet Yellen citing strength in the U.S. economy and the labor market.
Our decision to make another gradual reduction in the amount of policy accommodation reflects the progress the economy has made and is expected to make toward maximum employment and price stability objectives assigned to us by law.
The Fed's forecast suggests it may hike one more time this year for a total of 3 increases. The rate hikes could mean higher monthly payments for credit card users and people with home equity lines of credit or adjustable rate mortgages. The Fed was looking for inflation at about 2% this year, but now believes inflation will be a little less than that. The Fed also announcing a detailed plan to wind down its balance sheet this year, selling off some of the assets the central bank bought to stabilize the economy during the financial crisis. Right now, the Fed is sitting on more than $4 trillion.
We currently expect to begin implementing a balance sheet normalization program this year. Consistent with the principles and plans we released in 2014, this program would gradually decrease our reinvestments and initiate a gradual and largely predictable decline in our securities holdings.
Chair Yellen also addressed questions about her own future with the Federal Reserve. As reports have surfaced, the Trump administration is looking for a potential successor.
What I've said about my own situation is that I fully intend to serve out my term as chair, which ends in early February. I have not had conversations with the president about future plans.
For Nightly Business Report, I'm Kate Rogers.